Hey guys, thank you so much for watching this video. Please give us a call if you guys are looking to improve your credit score, lower your car payment, buy a car, trade in a car. If you're looking to purchase your first home, if you're looking to purchase a rental property, we can help you. Give us a call today, 877-205-7771. Talk to you guys soon, and thanks again.
Hello everyone, this is Calvin Russell, CEO and founder of 850 Club Credit Consultation. Hope everyone's doing well today. Today we're going to talk about, can your auto loan payment get you denied for a mortgage or a home loan? And the answer is yes. Let's talk about it. So in today's world, a lot of people have student loans. With student loans, as we talked about in previous videos, it decreases your buying power, right? Because the debt is there. Now, I know side note, I know a lot of people say things like, well, what if I get the student loans removed or whatever? Just so you know, most people that normally buy their first home is normally with FHA. FHA is a government insured home loan, okay? Now, if it's key word there is government. So people have government student loans and then a government mortgage. So the government knows about your student loans regardless of your credit report. Mainly the credit report is really for you and the lenders to have access to, but the government knows about it anyway. I say that to say, whether it's on your credit report or not, they're going to see how that is. They already know what your balances are with the student loan process, just so you know, because they order what they call an FHA claim number. And here's the worst part. They don't even order that number until you get about 70 to 80% into the deal. So after you look for a house, find a house, get under contract, do the inspection, do the appraisal, then they order the FHA claim number. So keep that in mind. And I've seen deals fall apart just because they had student loans in default and it didn't look like it was in default on their credit report, or it wasn't even on their credit report, but the government's going to find out anyway. All right. So let's go back into what we were talking about before. If you have student loans, it's going to decrease heavily your buying power for a home, depending on how much you have. If you got like 5 to 10,000, not going to play that big of a role. When you start getting like over into the 50,000s, 100,000s, that type of range, then your income needs to keep up with that. If you have student loans over 50,000, your income needs to be at least 50,000. Over 100,000, you need to be about 100,000. Now, can you still purchase a home? Absolutely. But it will lower your buying power. Otherwise, you may get denied overall. And this is where that car comes in, because they already have a certain amount of debt from the student loan that is not going anywhere, right? And then you have the new mortgage that they're looking at. And then they also have the car note. Now they know that you're going to pay the car note every single month. Traditional car payments normally, most people normally have a $20,000 car, $25,000 car or less. Sometimes the interest rate's a little bit higher on a $20,000 car or whatever, not because of the amount, because everyone's situation is different. So how do we avoid having a higher car payment when we're looking for a home? Well, number one is going to be refinancing. That's a video on YouTube somewhere around, on my channel. That's a video I did not too long ago on how to refinance or lower your car payments. So take advantage of that. If your score qualifies for a mortgage and you're out here shopping for a home, you most definitely need to refinance your auto loan. Refinancing your car will not mess up anything in the mortgage process. I don't care what anyone says. I don't care what any mortgage lender says. Here's why. The amount of debt is not changing. So if you have a $20,000 balance on an auto loan, you now got pre-approved recently for a home, you're obviously 620 or above. More than likely, you could try to at least try to refinance. The video I did on YouTube a while back, those are soft pulls, so they won't even affect your score, but they will do a hard pull if you accept the terms from the soft pull. Does that make sense? Hope it does. If not, swing on over to that old video, okay? But in short, number one, try to refinance that auto loan. If the balance is $20,000 and you go ahead and refinance that auto loan, not everyone's going to charge what they call an origination fee. And you'll find out a little bit about that once you're applying for the auto loan. That's pretty much their fee for refinancing you, okay? And you'll lower your monthly payment. But I have clients that, the normal payments is usually about $400, $450, $350 and lower. When you start getting above $450, that's going to play a role again in your buying power. I've had clients get denied for a home loan because their monthly car payment is $700, $600, $500. You can have that payment, but the income has to be there, especially if you got student loans. So if you got like over $80,000 in student loans, you're making $50,000 a year, and your car payment is $500, you're more than likely not going to get approved for much if you're going to get approved at all. You may need a cosigner, okay? And everyone says, well, I don't know a cosigner. Chances are you're probably sleeping next to a cosigner. I'm kidding. Keep it G-rated. So, but either way, I always bring it up as a nice joke because Everybody can, man, you'd be surprised. A lot of people can co-sign. And if they can't co-sign, especially if you're sleeping with them, you need to make sure that their credit get right. Is that okay to say? So make sure that you're lowering your car payments as best as possible. Number two, I had a client who actually paid off their car. I had two clients actually. They had, man, they're squirrels. They save a lot of their money and they do a great job at doing so. They paid off their car. Now you got a $400, $500, $600 monthly payment that's no longer there. That is absolutely amazing. And that pushed up her buying power from 160 to 220. Ain't that something? Because she paid off her car. I know you're probably thinking, Calvin, I ain't got that kind of money to pay off my car. Well, again, we have to figure out a way to either refinance it, make more money, or start paying a little bit more on your student loans. That is going to be like in the far-fetched part of it. You're probably like, I have no intentions on paying any of my student loans, but I have every intention on buying a home. So just look for ways to kind of lower your car payments and things of that sort, refinancing, paying off early, turning it into a personal loan. I've seen that as well too. You know, a lot of times, just because, I'll give you an example. A great example. You may owe $15,000 on your car. It may be worth 10. Nobody wants to refinance you, but your score is high enough to get a personal loan. So you get a personal loan, get a better interest rate, use that amount of money, pay off the car. Now you have a lower payment, and that's still going to do a debt to income, but now that auto loan is paid off. So instead of paying, let's say $400, $450 a month, now you're paying $300, $350, $375 or whatever. Every dollar counts in your buying power, especially if you have student loans. You guessed it. So why do we have all these damn student loans? Man, blame the baby boomers, okay? I'm kidding. No, I'm not. All right, so either way, if you like this video, like it. You want to share it. And as always, be sure to subscribe as we have nothing but great content on the way. Thank you guys so much. Have a great day.